السلام عليكم، صباح الخير. نشكر الحضور للجلسة الحوارية التي سنناقش فيها نتائج المالية لشركة تأجير التمويل للنصف الأول من عام 2023. Good morning, welcome to everyone for this discussion sessions to discuss the result of Taageer Finance for the first half of 2023. Next slides. Before we start the slides, here I'm going to introduce the colleagues with me. Mr. Fahad Al-Balushi joined us as General Manager, Finance, and we have Musa, the Head of Finance, and Mr. Kashif Yaqub, the DCO, and Mr. Akhtar is our Accounts Analyst. I'll take you through the performance highlights. As everyone is aware, the company in 2000 and it's been listed in 2005, and currently we are operating as with a staff strength of 154 members, and the organization ratio is 89%. The performance highlights for the first half of 2023. The finance income, it went up by 23% if you compare it with last year's Q2. And the interest expense went up by 29%. The net finance income also went up by 17%. Other income went up by 25%. The operating profit for the first half of 2023, it went up to 32%. Currently, it's at 4.7 million compared to 3.5 million last year's. The provisioning, it's went up by 45% compared to last year in the similar quarter. And the total provision for the first half is 2.8 million. And the sector, the entire provision for the sector during the first half of this year is 6.2 million, where Taageer itself created close to 46%. The net profit also increased by 16.5%. Next slide, please. So the statement for the financial positions that shows the incremental in cash enhances by 100% almost to 18 million compared to 9 million. And the unearned income for the company also went up from 82 million in Q2 2022 to 104 million. In this year, the incremental is about 27%. The cumulative provision also went up to 28 million by 26% compared to last year's. Other assets also less by 11%. The total asset for the company reached 237 million compared to 192 million last year's. The liability or the bank borrow, the total liability and the bank borrowings went from 147 to 190 million. And the total equity, it's still at 47 million by additional 5%. So the total liability is 237 million. Next slide. Key ratios. The portfolio shows that it's grown to 246 million compared to December 22, which was 218 million. And the market shares for the company went up to 22% currently. The provisioning coverage also went up from 66% in December to 69% in June 2023. And the aim is that to achieve, as we discussed in last quarter, also in last years, to achieve to cross 70% by the year end. The earning per shares also, it is at 11.8%, where our aim is that to retain what it was in last year, December, it was 13.1. Next. The revenue for the company, it stood at 13.5 million compared to June last year, which was 11 million. And the revenue per employee also went up. If you compare it with June 2022, currently we are at 175.5. Cost to income ratio went down from 46 to 40%. And we have a growth in the operating profit by 32% to 4.698 million. And again, there is a growth in the PAT itself by 16%. The company have the growth in all elements, and let's say in receivables and also in provisions. We have very high growth in the provision during the year. Next, please. We'll take you on the key highlights. In terms of business, we introduced this year Mumayyiz Priority Finance, and this is one of the products which been launched during the years. It's the purpose for it was to retentions of the clients, the company's existing clients should be retained, and this is services being given to those clients and customer who have a record with the company for numbers of years and start doing very well. And we launched also a digital loan application being launched during this year. In the funding, we have a strong growth in the funding year over year in the deposit, if you see, and the company's success over the last 2 years to attract bonds from the markets, and the achievement was 132% in the first year, and the second year also 195%, which is giving or building up the trust in the market and the company. And we hope that, inshallah, the company is prepared for the payment of the due bonds, which will be at the year end, by creating a special reserve fund for it, and can be paid on time, inshallah. The portfolio quality also, where it shows that the coverage ratio is improved from 62% to 69%, and the reduction in the NPA from 17.7 to 16.6 also it went down. Now, latest also FM41, which been a new opportunity for us in leasing company to do more businesses. CBO came with many rooms and doors to improve the businesses for the sectors. There are some area which we highlighted in this, like the deposits has been reduced from 10K to 5K, the minimum tenors also from 6 months to 5. The real estate also, there is an opportunity on personal loan. Also CBO shows that we can proceed with personal loan. On the tenor has been extended to 7 years. Working capital facility also for secure and non-secure. Now the execution of this whole CBO related, let's say the opportunity which being given to the sector is facing the main things, which is what we will highlight in the next slide, which will be the limitations to the growth. Again, the banking system or the banking in Oman, as everyone is aware, we have 6 to 7 local banks, and very soon will be 6 already. And 6 of them, their lending to the sectors is also limited. And that could be one of the challenges which the sector will face. And that will be a tough time for us also for execution of whatever we are getting as a new doors or new opportunity being given to the sector by Central Bank of Oman. Thank you very much. This is all what we have. Now, please, if you have any queries, any questions, we can answer your questions.
Hello.
Good morning.
Good morning, gentlemen. Thank you for the presentation. This is Bishan Bhalla from Vision Capital. Just a couple of queries. You mentioned your provision coverage ratio is around 69%, and the target would be 70%. If I may ask, why that target of 70% not closer to sort of the 100% mark? If you may just give us some insights into your provision coverage ratio outlook.
Bishan, if you remember last time you asked me the query also related to this cannot jump to 7. Yes, our aim is to achieve 100%, but to take the provision to a level of 100%, we need time for it. Because in the past 3 years, we brought it to 4 years, it came from 47, 46%. Currently, we are close to 70, and maybe this year end will be at 72%. And as everyone is aware, yani, the portfolio also is going up, and to reach that level, I think the incremental cannot be more than 3 to 5% on the good years. And everyone also knows there's a stress on the spreads nowadays because of the incrementals of the rates in the market. Also, that will not give us a room to have a higher income. Now, the income slowly, it's been reduced because of the funding or liquidity issues which is in the market. So we are in Taageer, at least we are building it up, and we feel, yes, maybe by this year end, we cross 70%. It could be 72% or 71%. Next year, inshallah, also, we will try to go higher than 75%. That will be the aim also. Maybe the year after, we can be closer to 80 or 90. That depends, again, on where the market will take us and what will be the interest rate and our funding cost.
No. I didn't mean, with due respect, I didn't mean for this year itself. I just wanted to know over the next 2 to 3 years, and you rightly answered. So
Yes.
let's say a 3-year target would be, say, around mid-80s. Is that a correct estimate? So let's say over the next 3 years, closer to 80-85% is an aspirational target given the current scenario?
Definitely. Within the next 3 years, we should cross 85%.
Excellent. No, that's exactly what I was sort of referring to, not just in the next 6 months. In terms of your loan split up, we've seen a lot of growth on the retail lending. If I look at YTD, it's up 14.8%. YOY, it's up 32%. And sort of, so you're seeing far more opportunities on the retail lending compared to sort of the corporate side. If you could just shed some light on that.
The portfolio for the company also, it's contained the mix, the mix which we have it, and the size of the ticket, maybe that is one area where we are writing business. And yes, our SME, it's similar to retail also, to whom we are funding today. And
Okay.
yeah.
Okay, because when you give a split up, you say you give it as retail and corporate. So SME is sort of under the retail side. Is that what you're saying?
Let me explain it in a wider for you. See, there's a big difference between the corporate, the banking corporate transactions and the leasing also. And especially when it's come to the small entity in the leasing, like we are today 5 finance company. One is of us, it's a higher, they can take a big ticket or bigger transactions. For us, almost the transaction size itself in the commercial or the corporate, it is less than $1 million riyal, what we call it a corporate business. So when we call SME, so the majority of the businesses, if we, last time I told you, the execution, a number of contracts being executed during the year 22, it was close to 10,000 contracts. That shows how the business tickets are very small. So even the SME we do writing, maybe we are 2 company today, I can say, in the sector. We are writing SME, we are supporting SMEs. But our SME is what, 50,000, 40,000, 100,000. This type of SME, we call them, or corporate, we treat them. So any transaction, let's say above 250, we treat it as a corporate. But again, all the transaction under 1 million. The banking model is different completely. Maybe they treat up to 5 million as a SME in some of the banks.
Got it. Yep. Thanks for that clarification. Makes sense. And sir, with regards to your NPAs, you said it's around 16.5%. Again, and this is just over a sort of medium term, let's say over the next 2.5 years. How do you see your NPA? What would be a comfortable level? I know the lower the better, but what would be a comfortable aspirational number for Taageer over the next, let's say, 2.5 years from the current 16.5% level?
Well, I see, Bishan, the comfort zone for everyone is that to see his NPA with a single digit. I believe everybody is aiming that in the sector. But since we are coming out of this difficult markets in the past 3-4 years, and prior to that also, if you remember, after 2013 and 14, from there, this NPA started again jumping us Prior to that, it was less. It was a single digit. So nowadays, whole the sector, what they have, it's almost double digit, but some of us maybe higher than 16 or 17. The average within the sector, maybe we can say today we are within the average. The sector average is 16. But yes, our aim to see this with a single digit in the next 3 years. So we want to achieve that to see it less than 10%, for example. Again, there is one element. If we look, see the companies also depends how we are treating the NPAs itself. Do we are writing off? Do these are very bad cases? No, till now, no. We can't say that because still the collection or recovery from whatever 16% is showed as NPA, we can say more than 60, 70% of this NPA is recoverable. Just it's a matter of time. If I'll take you again through the cash flow of the company and the collection which is happening, the normal collection is more than 87%. That shows the collection is happening. Now, if your normal collection is 80, 85 or 87%, then you have another one item, which is the collection from the overdue also how much. So net addition is how much is coming to the book. There, I think we are fine. I believe most of the sector, I mean, the leasing company in the sector, they are fine with the cash flow in the last 1 year. After, I mean, the recovery, we can say the recovery started from the pandemic.
Okay.
Please.
Okay. Yeah. And just one last question. Thank you. Would be, what are the main sectors or what are the opportunities that you see, going forward for Taageer and the leasing sector in general for sort of, making your spreads of a lending?
Here, the main sector will be, again, see, let's be honest, everybody's waiting for government projects. And if there are the main sector in the country, again, if it slowed down or it was slowed down or been forced to slow down, which was the constructions. And again, if we talk about tourism, or we talk about anything, again, it will be linked with the constructions. So the construction is one area where we see also a lot of activity is happening. I'm talking about the commercial side of the company. Yes, retail business always for us as a finance company or leasing sector, it is there in terms of cars, household items. Now CBO allowed us for personal loans, maybe some commercial building with a real estate scheme which came recently. That depends how the funding will be available again, the market, and what will be the competitive rate between us and the banks, because the banks are active also in the real estate. So for us, again, it is the constructions. Construction overall is a construction. If it's a tourism, it's a constructions. If it is roads, new schools, new whatever government they are spending. To be honest, between brackets, I can say that everybody's eyes at Ministry of Finance door. What they are going to give, and we will take it.
Noted. Okay. Thank you so much for that. Wish you all the best.
Thank you.
Hello, good morning.
Good morning to you, Mr. Matthew.
This is Joyce from United Securities. Thank you for the presentation, and congratulations on a good set of numbers from the balance sheet perspective. So my question is, you had a very strong quarter or a strong year so far this year. So what's your outlook? You shared some of your long-term objective on the loan growth side, but what's the short-term or short to medium-term outlook that we are seeing? How strong are we seeing the market, and how strong are we seeing the recovery in the market over the next 6 to 12 months?
Right now, I think what the first 6 months, what we see, I think the market is recovering well. Both in terms of retail side, the demand has increased, and in terms of the corporate side, we have seen that now the businesses are again asking for money for their working capital requirements. So we see this trend continuing. If we compare our business growth versus last year's same period, it's around 17% more. So we see the trend to be continued in the next 6 to 12 months. Okay.
Thank you. And your planned reduction in NPAs and planned increase in the coverage ratios. So where are we seeing this? Is it because of recoveries from the legacy portfolio, or is it because the quality of the new demand is increasing, and we are seeing very small amount of bad assets coming into the portfolio? Is it so? Where are we seeing, and how are we planning to achieve this ambitious target? In my, if I can say that.
If we will talk about the NPA itself, if you mean how we are taking care of it, or what is the performance of that bad debt, is it?
Yes. Two things.
Yeah.
One is you have a big 16%, 17% legacy NPS, which are sitting in the books. So how is the recovery from those portfolios, and on how are we planning to achieve the single-digit target that we are looking at for the NPAs and the higher coverage ratios?
As I discussed earlier, also I mentioned that currently for last 3 years we shifted the company's direction in writing the new business completely. We used to write tickets between above $1 million money, let's say, and we used to have in our books 25%, maybe one day, or more than 15%. Then it's drastically reduced. Today, we don't maintain any accounts. Let's say in the last 3 years, we did not have any transaction above $1 million. 98% or 99% of the current executions, it is at a very low levels. So this is where diversifying the new business risk. Yes, we still do have some of the old account, which we are taking care of them. Some of them, it's already been shared with the market, and the provisioning coverage ratio on this special account already the company taken care in the past 3 years, and very soon, some of them already the coverage ratio reach 100%, even though those accounts, some of them, believe me, non-NPA, but we consider them. Why? Because we do understand that the reaction or the behavior of this account in the market, it could have an implication on the company. So there, the creation of the reserve started. Those which went bad, already the company taken care. The new, as you mentioned, the new is that the strategy is that since we are a very small company and we want to improve and build up our reserves in terms of provisions, we are not writing big tickets. Let's say big ticket for us, anything's above $1 million. Even this million, when we talk, maybe in the whole year, we don't write 10 million each transaction of $1 million. We write 200, 300. That's why we diversify. When we talk last year also, we said we written 10,000 contract and during 12 months. That shows out of 65 million real business as a new disbursement happened last year. That shows how diversifying we are doing in the books. So addition as a big ticket will not be there. Whatever we have in the books already been taken care of it. And whatever is in pipeline or we are expecting that the behavior, because of the availed us deferment and the other leverage, we call it, which the market gave them, we are taking care of them also, and we are preparing ourselves.
Got it. Thank you. And on your funding side, what I'm seeing is earlier you have primarily depending on bank borrowings, but in the recent past you had a shift in strategy where you looked at the bond market in a very active manner, and you started receiving a lot of corporate deposits. Is this a conscious strategy? And if it is yes, then I'm seeing most of your funding is the bond funding is on 2-year, which is a short-term funding basis. What's your plan there, and what are the funding sources that you will be targeting for supporting the growth?
First of all, as leasing company, our paid-up capital is limited, and our source of funding mainly used to be the banking. Prior to 21, maybe 95% or 93% of the borrowing used to be from banking source. Then since the banking source itself is limited in the country, after this whole, there are pipeline consolidations maybe happening tomorrow or the day after, and there are also, let's say, consolidation happening, recently been announced also. So we came with this strategy to diversify also the source of funding for the company. I do agree. We success in 2 bonds, and last, that's the limit. Also, we have a limit in the bonds and we have a limit in the deposits. We success in the bonds, and it's 2 years bonds. Absolutely, you are right. But we have taken an initiative from the day we have taken the first bonds. Today we have a sinking fund, which can service the first due bond, which will be somewhere in November this year, without harming our cash flow. So we're preparing also. We were using the sink funds. We used it for last 23 months, and yes, there is a cost on this side also by creating it. But I believe we are fine today. Today, I can say 30% of our funding source, it is from non-banking, and 70% is from the bank borrowing. Maybe in the future, the banks will be more active and more attractive for us, and then we'll go back to the banking, because in the past, everybody knows in the last 2 years, the banks, the rates, the way it's been increased in the market, it forces us also to diversify the source of funding. And if the bank will revisit the sector, because honestly, not all the banks are active in lending to the sectors. Some of the banks maybe treat the sector as a competitors to them, and they have zero exposure with the sectors. I'm talking about the local banks. So, and if some others, yes, they are helpful and they are with us. So we are again limited sources of funding. So the only is will be this, and we appreciate CBO latest also circular which came. They do understand that area. That's why they reduced the deposit size. It was previously higher. It came to 10K. Nowadays it's 5K. 5,000 riyal deposit can come from any small SME company, can deploy that money with us, and we can give loan against it. So this is a big room again for us to keep and serving the SME sector, which is the aim for the leasing companies. Clear?
Got it. Understood. Another one is on your spreads. Your margins are your yield, your cost of funds, and everything. So what's the yield? How right now we are talking about almost 12% on your asset yield. So what there is a limit for the borrowers also, isn't there? Getting financing at 12% and servicing their margins and protecting their margins and everything. It's going to be challenging. So where do you see the rates heading to, or the yields heading to, and where do you see there will be a balance between the demand for credit as well as the pricing of those credit demand?
Matthew, let's be honest also, we are in this sector for last 23 years. We have seen a rate of 9% on deposit, and we have seen a rate of 7% on deposit by the banks. And we used to sell it at 17% and 18% IRR somewhere in 99 and 2000. Today, yes, the rate, I feel the rate is higher. And maybe there's a big support should come by the government to support the SME sectors. And for us also to sell to the retailer also becoming difficult, but we don't have other options. It could be that maybe we are giving a good service or excellent service that still there is a buyer who can buy the real from us. Otherwise, if you take it and compare it with the rate, no, our rate is high definitely, because today our funding cost is gone up drastically. So whole the sector is facing big issues. The deposit, or let's say the STL, used to be at 2% and 2.5%. Today the STL is at 6.5% and 7%. So we will not be able also to serve it and to sell it at an IRR of 9% or 10%. I believe maybe something will happen next year, or maybe some government subsidies come. We wish one day to see the government subsidizing or putting some money to the sector, because the sector have a portfolio of close to 1 billion today, and they are the one who are supporting the real SME. Many entities or institute being brought up by the government to support the SMEs, they did not success for long. I mean, the latest also was another fund which went to another. So I believe this sector is the core sector. We have seen those clients where we funded them the 6,000 riyal in 99 or 2000, and then we funded them the rose rice. So this is just, we hope that one day, inshallah, we will see again something from the government to support the leasing sector by subsidizing some of the rates, so we will be able again to sell it. With the current market directions, we will not be able to sell it less than 12%. And it could be some of us are, they are excellent in their services. That's why they are able to sell it to their client.
Got it, sir. The next one is on, you briefly mentioned about your target for the year, EPS target for the year at similar levels as last year. But, the first half has been good, 15% growth year on year. So why are you limiting yourself and saying that the profit, we want to maintain the profit instead of, maintaining the growth?
Again, you cannot take all the things. If you look also how we are building the provisions, and we want one side to create more reserve for the institute. In the other side also, we are giving a growth on the PAT numbers. But again, on the EPS, maybe on that will be again stagnant, or could be a little bit higher than it was. It's two-way, either take this or take that, because it will be difficult for us also to build up the provisions. See, to sustain your company and to be able to service any unforeseen accidents could happen tomorrow, we have to build up the provision. We believe in it. That's, the Taageer management or board and everybody is believing in that. And we do agree, our shareholder also in line in it, to strengthen the company as much as we can and to bring it to a level. Yes, Taageer will be, maybe next year will be able to pay higher than 13 or 14%. And we want to see that EPS jump to 15%, inshallah. And it will go somewhere in 24 and maybe 25, inshallah.
Got it. Very clear, sir. Thank you very much. And wish you all the best.
Thank you. Shukran. Thank you. Thank you.
Hello.
Yes, please.
Yes, so just one more query. You mentioned about your provision coverage, and I take that point. I just wanted to ask you more academically rather than sort of putting you to a number. I understand that dividend payment is a board decision or a shareholder decision, but from a CBO guideline perspective, if the provision coverage ratio is below 100%, is there a maximum that can be paid out? So let's say if you have a 70% provision coverage ratio, is there a maximum payout ratio that the CBO defines? If you could just shed some light on that, sir.
Yes, see, there is a payout. It's by CBO. It's again linked. It's up to 65%. And again, the approval also linked with Central Bank of Oman, definitely. And they have many statistics in place, and they see the sector itself. And then depends on that, they may reduce the provision if they see it too higher. But I don't believe right now we are higher. If you go again back to what's happened in the last 3 years, from all this deferment and this, CBO is encouraging for more reserve, and they want to see healthy and strong in the financial institutes. And for us as an institute or as a company itself, honestly, one of the plus points today, if you go to the money market, is how strong is the company. As you are aware today, our borrowing is close to 190 million. And this 190 million, it's the money from the money market. And these lenders also, they want to secure, it's not only the shareholder want the dividends. The lender themselves, they want someone to convince them that your money are secure and safe place. Then they can put more deposit, and then they can put, let's say, they participate in the bonds. So this is, we have to balance it between all the shareholders, the money markets, and the regulatory also. And absolutely, the regulatory, they have a say on it. And always we are getting advice by Central Bank of Oman in this matter.
Okay, but is there like a hard cap? Like you said, 65% is the upper limit if you have a 100% coverage ratio. But if your coverage ratio is, let's say, 70%, then is there a maximum, or do you always leave it with CBO to decide as per their guidelines?
No, the payout itself is 65% from your PAT. Whatever is your coverage ratio, it's not linked with it. So the maximum payouts can be 65% only, and the balance will go to the other reserves.
Okay, fine. So what you're saying is, irrespective of your coverage ratio, if you make an EPS of 10, you can propose a dividend of 6.5, and then the CBO takes a call as to whether it needs to modify that or let it be at 6.5. But under no circumstance can it exceed 6.5. Going lower is up to CBO's purview.
Yes.
Okay. Yep. All right. Thank you. That's it from my side. Thank you. So, and just sorry, one last query, sir. I think I heard it right, but I just want to clarify. You mentioned your cost of funding currently is around the 7.5%. Is that correct?
Sorry?
Your cost of funding, average cost of funding, is it around the 7 point?
No, cost of funding depends. You have to consider the average. The average will be less than 7% today.
Okay.
But yes, there are, there's a bond which came close to 7% or more, little bit slightly than the cost of it was more. But the average funding cost today, it's approximately, I can say, between 6.5 to less than 7%.
Okay, sir. All right. And just one quick sort of very small feedback. I think on an annual basis, banks give their effective interest rate on both loans and deposits. I did not see that for Taageer in the annual statement. So if you could just mention on an annual basis, it would be helpful, sir.
Inshallah. We'll take it as a point.
Thank you so much. Wish you all the best.
Good morning, gentlemen. This is Abbas Mislemi. I work as a portfolio manager with Vision Capital. Thank you very much for this presentation and, a very transparent sort of Q&A. I've learned a lot about the sector attending this call, and, you've really given us a perspective in terms of the challenges, the company and the sector is facing. And, it's been a very honest discussion. Much appreciated. Just wanted to ask you, sir, in terms of your current conversation with bankers, we understand that rates are going up, but and that's been the case for the last year or so. Are the interest rate conversations with your bankers behind you? I mean, has your banking sort of deposit book, has it been repriced, or you still see there's upward pressure on that in the next 6 months or so?
Abbas, repricing with the bank, that's a continuous thing. Normally, the bank, they have a facility for 1 year, but within that period, the short-term loans can be repriced. So that is a normal phenomena. Having said that, you see, this is a market phenomenon. I think from the borrowing side and lending side, from our side and the customer side, now this adjustment has taken place in the market. So it's not a surprise now. Maybe around 8 months ago, it looked like a surprise to many of the customers, and now everybody knows how the interest rate is being revising. So many of the customers are adjusting themselves, and so are we. So we are trying to pass on this cost at whatever is possible. But you understand, as the CEO mentioned, that we are mainly targeting the SME market. And the ability for SME market to absorb that increase is not the same as bigger and stronger companies. So we try not to burden them to the max and try to adjust some burden. So obviously, which is a pressure on us.
Understood. And, I appreciated the CEO's comments a lot because, he was extremely transparent in the challenges, the company is facing. So, you raised a very important point. You're saying that CBO has done a lot in terms of expanding the scope of work. But, from the deposit side, there's a bit of help that you guys can get. Now, when you approach the big depositors in the country, the government-related depositors, pension funds, what sort of conversation? I mean, do they tell you that the ratings is a problem where they're not allowed to deposit money with you? Because these are the large depositors in the nation, So what sort of conversations are you having with them for support?
I'm glad you asked this question because the thing is that, obviously, when we go to funds and investors, which are institutions, so it's not an easy sell. So we go through all the same due diligence which are being done by the banks because they want to understand the business model and they want to see that, the money which they are putting, is in an institution, because obviously in this case, sometimes they are comparing with more stable and bigger institutions like banks. So what our main argument is that in terms of this sector, the regulator is the Central Bank of Oman, which is the regulator of the banking sector also. So that's a big comfort. In addition to that, in terms of the corporate governance practices, if you see the kind of auditors we have, they are all like, big four firms. Not only they are our external auditor, but we have a core-source internal auditor, which is another big four firms. So the kind of comfort which they get with the corporate governance practices, that is one part of it. Then in terms of the performance of the company over last 4 or 5 years, they've seen consistent improvement in almost all the parameters. That is another area which they are very comfortable about. And then we are very transparent in explaining to them that how we are mitigating the risk. Because as you mentioned earlier, that the sinking fund, now this is something which is obviously a burden on us. But in order to create that image, that for us, the confidence of investor is much more important. Even it is a cost for us. So these kind of things, when we explain to the investors, so this raises their comfort. And over last 2 years, I think we have met several institutions. And fortunately, we are able to convince them.
Okay, that's good to hear. And if I can differ on Mr. Balushi's expertise, I was following your CV, and you've been one of the longest serving sort of leaders in this sector. Just the nature of the sector, when we compare your NPL ratios, and we're talking about the mid teens, which obviously is on the higher side, but just the nature of the sector, sir, is it just the kind of customers that you deal with? It's a little subprime in nature, right? Because given the interest rates that you're charging your clients, given the guys are not necessarily banked by the bigger entities, so the subprime nature of the sector, is that a reality? And if that's the case, rather than comparing it to your banks, what do you think is a healthy sort of NPL ratio where you feel like, given the challenges of the sector and the realities of the sector, this is the NPL sort of ratio where for every 100 riyal you write a new loan, this is the expected sort of NPL ratio, because the sector is not a prime sector compared to the banks. I just wanted to hear your views, sir, on this.
But when we talk again with the NPA for the sector, yeah, I believe anything less than 10% is fine within the sector. Because see, the trends here in the leasing sector in Oman, the repayment, with whom you are dealing also, the entire business which you are doing is today with who? We do it with the new entities, with the founders who have an idea. This guy who have an idea, nobody will fund him in the market. So we are the one who are taking the risk. We are the one who are building up everything from the ground. His banking side will be with the banks, that the bank will take him after a year or two of success. If he fail, we will bear all the costs. If he success, they will bear it. So if we go and talk, if you mean the best NPA ratio, the best NPA will be a single digit. But again, let's go to the other elements in it. What are the difficulties or where we went wrong in the sector? If you go back in the last 25 years, even the government tried to copy the sector. They came with an institute similar to us, but they could not maintain them. The expertise which the leasing sector have in Oman in the last 3 decades, like we have company, they completed more than 30 years in the country. You see, from last 35 years they are operating, no single institute of the finance company between bracket went into bankrupt or went into, let's say, non-healthy, whatever they went through, difficulties, time, again, they come back. Because as I mentioned earlier, we are diversifying the risk completely. Our number of clients, when we talk about commercial and retail, today the ticket size and the commercial side, it's less than 10,000 riyal or 14,000 riyal. The ticket size in the retail business, it is, let's say, 5,000-6,000 riyal. So this mix give you always a room of easy collection, let's say. Yes, single digit will be the best practice. A creation of a build up the provision to a level more than 100%. I believe in more than 100%. That will be one of the main pillars, let's say, which will support the leasing company, that company to do more businesses, to take more risk, and to get more incomes. Still in the sectors, we believe the sector can come back. The sector can come back. The sector just need a little support to raise their entire portfolio close to the 1 billion, to bring it to a level of 1.2, 1.3 billion, to really support, because there's a big opportunity nowadays in the country. If we go back on the SME side, there is an opportunity to do businesses, because we are finding that But again, we have our own limitation because our source of fund is limited. Our budget for the year is limited. If we have last year a new business, 65 million, this year we have something close out a little bit, 10% or 15% more than the previous years. So all the sector is becoming limited with this area. Again, the leverage, you see the leverage which being allowed to us by the regulator again, it's we have to go to not more than 5 times of our net worth. Again, it is with the bank, some of them, they have special things. They need a 3.75 or not more than 4 times of your net worth. This whole limit our area. That's why the business, yani if you go to a neighboring country, it's 10 times leverage. Somewhere it's 15 times. I was working with an organization in the same group. We have in a country 15 times leverage, and we have somewhere which was 10, and in Oman we have it at 5. But yes, this caution, whatever CBO they put it, I'm sure they understand the market because our market is different than the other markets. And but we need it in different way. We can support the SME. We as FLCs, as a sector, the best practice for us to see our NPA level less than 10%, which should be single digit. That is good, and it can be because I've seen it at 2% NPA, and it came down from 30% to 2% to 2.5%. So that can come down. And we went through it. Myself, I have seen 30% NPA, and I've seen it came down to 2.5%.
Wow. That's wow.
So this is just, and now the tools and the changes in the legal system is going to support us more. You remember 2 years back or 1.5 years back, big changes happened to the legal system. The implementation just now taking place. We believe this whole, if we get them together, very soon, inshallah, somewhere in maybe in 25, most of this company will come less than 10% will be with a single digit.
Wow, that's heartening to hear, especially if someone with your experience who's been in the sector for so many years. If I can just rely on your experience for one more question, and I keep bringing that up because you work with National Finance, you work with Oman Oryx Leasing, you've been in the sector for many years. There's a consolidation sort of push across the financial services sector. You're seeing that at banks, you're seeing that in insurance company that happened. And there's definitely a need for consolidation on the leasing side. Now, someone like you, and I know a lot of this is shareholder decisions, but someone like you, and your colleagues in other C-level positions in other leasing companies, I believe, you can drive this consolidation in your sector simply because, you've worked with different stakeholders for so many years. There is no substitute to kind of experience, and both in terms of number of years and the kind of C-level experience that you have. What is your view on consolidation, sir, and how does Taageer fit into this whole consolidation story?
Again, consolidation is good. It's healthy. It depends. It could be. It's both sides. We can treat it. It's good for the shareholders, and to see a bigger institute, to see a bigger company, maybe to service more. Other element for a small country like us in Oman, consolidation will close one windows of leverage for the SME sector for the developments of the country. Now it's 2 ways win-win. If you look from the benefits of the shareholder, yes, I do agree. They may come with a new company. Always a new company. There will be less staff, reducing branches and other elements. And you can write a little bit, take more risk, higher leverage will open. There are many plus points on the side of the benefits, let's say, which is for shareholders. If you look as an economy, I don't think, because we are too small as a country. This is my belief. And they need more windows, especially the country is encouraging the SMEs in all sides of businesses. You see today, the private sector, they are the one who are accommodating majority of the staffing in the country. Today, the government, the hiring is going, let's say, honestly, it's in the private sector. The employment is in the private sectors. So to create more jobs, to create this, you need more SMEs. You don't need more big companies. This big giant company, 10, which we have them, already they became 4 or 5, and they are known. A number of the staff being reduced. But who absorbed the staff? Let's do a study. If you do it, it's been absorbed, again, 90% of them in the SMEs, or they came with their own business model, some of them small companies, small workshop, whatever they did. But again, they've been absorbed in the smaller size companies. It is good, and there are big opportunities for the shareholders to go for mergers. And again, it could be now mergers happen in the country in the past within the banking system. Maybe recently one has been announced that is not hidden, that is, call it HSBC with Sahar. That's a different model. But the past merger, whatever happened in the country, between bracket, I can say these are forced mergers. When on the banking side, one bank was not operating well and it's been taken over by another one, and that's how been built up. Maybe the last merger, which was between NFC and Oryx, it was a merger to two equal entities, and they became, mashallah, one giant. Today they are leading and they are number one in the market, and they have, let's say, 45 or 50% market share in terms of businesses, in terms of others, 20 branches or 21 branches, a good network they have also. But if you look at it, another side, I don't think the employment's gone up. The employment is as it was. It is at the same levels. Now, what is the benefit for the shareholders? Beneficials, for sure. Inshallah. And we hope one day to see more companies, more licensed companies, so the competition will be more. And more SME can get more money. Thank you.
I see it. I mean, you answered my question. I see your philosophy behind how you're looking at merger, which is a very interesting take. Because normally we are focused only on the shareholder returns, especially when I'm asking the question. But you've given me something more to think about, which is beyond shareholder wealth creation. There's another purpose to having more companies, so that more Omani SMEs are serviced by your sector. So I take your point. I take your point. No, the reason I was specifically asking for Taageer Finance is because you have very strong sovereign shareholder. And at the same time, you've worked in this sector for many years at the C-level. So I thought maybe you could become an acquiring entity because of the kind of shareholder that you have backing you. But now I understand your philosophy as management on why you think that while it can create value for shareholders, it might not serve the interests of SMEs in the country. That's a pretty interesting sort of perspective, which I've not heard before. That's it from my side. I just wish you guys all the best, and we really appreciate the presentation and the transparency that we spoke about. You spoke about building provisioning coverage. You spoke about, it was a very interesting call, in my opinion. Thank you so much for your time.
Thanks to everyone. Thanks for all colleagues who participated, and inshallah we'll see you next year. Thank you very much.